Ken Boyd with the Accounting Accidentally website, where you'll find over 300 blog posts, and if you slide down to the middle of the page, you'll find over 400 links to my YouTube accounting videos. And also remind you that I'm now on Patreon, where you can get monthly subscriber-only video content each month. So what I'd like to talk about today, and I'm going to go to slideshow and play from start, is Bed Bath & Beyond, their fiscal 2020 third quarter results. You can see toward the end of the year in the retail business. It makes some points that I think are valuable. So how did this company do so well during coronavirus? They talk about gross margin expansion being up to 35.4%. Their EBITDA increased by 168%. Pretty amazing results for a retailer getting through coronavirus. Let's talk about what those two terms mean. Gross margin, simply put, is revenue less cost of goods sold. Why is that important? Well, if you're a retailer or a manufacturer, cost of goods sold is your largest cost. So if you're Bed Bath & Beyond, the largest cost of the income statement is the physical items that you sell, that you buy in inventory. So what does gross margin cover? That dollar amount that's left over after revenue less cost of goods sold. Well, it covers all those indirect costs like SG&A, selling, general, and admin, what you can think of as home office costs for legal, accounting, insurance payments, payroll, all the other things that are not directly related to the product that you sell. So the big metric, if you're a retailer, is gross margin. And anything left over after all those expenses is profit. EBITDA, on the other hand, earnings before interest, taxes, depreciation, and amortization. Why is that important? Well, EBITDA is probably the most widely used measure of profitability that's consistently used by financial analysts. But I have a caution for you on EBITDA. EBITDA adds back non-cash items like depreciation expense and amortization expense that are required to own assets. So in other words, if you're Bed Bath & Beyond and you have physical stores, you have warehouses, you have fulfillment centers, those are all assets, and those assets depreciate. If you buy a patent or a copyright, the rights to those things, the rights are going to be amortized. So the point is that many companies like Bed Bath & Beyond require fixed assets and intangible assets that both have to be expensed. They're non-cash expenses. So if you subtract that and present EBITDA, you've got to remember that there are a lot of expenses that are not being presented. And two of those relate to assets that you need to expense. So there's a caution there. Another thing, cash and liquidity levels increase further. Again, a really impressive outcome for a company that's going through coronavirus. The company has $1.5 billion cash investments, $2.2 billion in total liquidity. So this is a jumping off point to talk about liquidity and solvency, which is the counterpart. Liquidity is the ability to generate enough current assets to pay all current liabilities. We use working capital as current assets less current liabilities, with the goal that working capital always needs to be a positive number. Current assets include cash and everything that's going to be converted into cash within a year, like inventory and accounts receivable. Current liabilities, on the other hand, are obligations you must pay within a year, including accounts payable and the current portion of long-term debt. Debt payments you have to pay within a year. So liquidity has a short-term focus. On the other hand, solvency has a longer-term focus, generating assets and cash inflows to finance debt and to purchase high-ticket or long-term assets. So are you going to generate enough assets and cash inflows over a period of years? And well-run companies have to do both. They have to do both of these things. So that is our slideshow. I'm going to click to exit. What I wanted to remind everybody was, again, that you can go to the Patreon page of Accounting Accidentally, and where you can get subscriber-only accounting videos that I deliver each week. Thanks for watching, and we'll see you next time.